to, oops, sorry, pressed the wrong button. Great, we are starting to go live. I think we're probably live now. Hey, Mark, let's just pick it up, man. So Mark and I, we were kind of chatting while we were waiting for some things to go up, and we were talking about our weekend. And it's actually a little coincidental because we were talking about cleaning up our own house, figuratively speaking, right? The classic joke is, the cobbler's children have no shoes. And before I start talking about what I ended up doing, Mark, why don't you continue? You mentioned you were starting to take a look at your portfolio again. You haven't looked at it in a bit, or?
Yeah. So yeah, we were just kind of in the middle of the conversation. So you guys are kind of joining in. So we'll kind of try and catch you back up. But yeah, basically something that I preach and maybe don't practice perfectly, which is just, looking at your portfolio, understanding the asset allocations of one, how much do I want to put towards crypto, but two, what do I want to allocate and diversify within crypto? And so those are personal questions, and I can give you guys framework to figure out what that means for you. But, for me personally, I think that within my cryptocurrency allocation, I typically like to have about 5% per allocation. So, for easy numbers, if I had $100,000 in cryptocurrency, I wouldn't have any more than about $5,000 in any one position. Now that'd be 5%. Now, what I found is that, I am so busy working, finding better, the best places to put the money, communicating, digging up news stories, etc., that I just haven't really put the time into my own personal portfolio, and it's just gotten carried away. So it definitely was diversified. The problem is for me, it was too diversified. I had way too many positions open. So I think somewhere between 30 to 40 positions is good. Maybe 20 to 40 positions. Like I said, depends on you. It's personal. But for me, I had about 55 positions open.
Wow.
And so for me, that's just too many. I don't like to have that many open. And the reason why is because although I love diversification, at some point you can be too diversified. And that's kind of where I've ended up. I found myself to be too diversified.
Wow. So now comes the point of you got to trim the hedges and call some positions down, and you're going to have to make some hard decisions because there's actually so many great projects, right? So
yeah, there are so many great projects, but you can't run your investing life like that. So that's like playing roulette, in Vegas. I could go put it all on number 17. But maybe I don't want to put it on 17. Maybe I'll put it on a couple lines, a couple corners, and kind of spread it around. But I'm not going to put it on every single coin every single number, because that wouldn't pay off. So yes, you want to be diversified to give yourself a better chance of profit. But at some point you have to, do your research and kind of pick where you think the best place is to go.
I guess this is where maybe you start doubling. I don't want to say doubling down, but maybe you start going more of like a sector specific approach where you say, okay, I might believe in this application of the blockchain, or I might believe in more of the platform side of things, or.
Well, it should always be that way. That goes without saying, but I'm just talking about how many positions I have open and how much do I allocate to each position. So that's specifically what we're talking about. Of course, you should always be investing in themes and sectors and stuff like that, but I could still have 10,000, or not 10,000, I could still have 1,000 positions open divided across those sectors. So it's different. I see Yusuf joined us. Good morning, Yusuf.
Good morning. What's going on, guys?
It's different for trading, and I'll let Yusuf speak to this, but I believe, typically traders would want to allocate somewhere like 0.5, maybe up to 1% of their total portfolio per trade, whereas investors, I think, should be in 2.5 up to 5% per position. What do you think about that, Yusuf?
Yeah, that's very common. Typically per trade, I'm allocating 0.5%, 1%, sometimes 2% if I really like the trade. And the way that I have my trade set up is where we have high probability, low probability trades, etc. So if it's a high probability trade with a good risk to reward profile, I might allocate a little bit more to it. But you can't go crazy. Risk management, even in long-term investing, it's the most important thing in my view. So
well, in every view, I mean, I believe it's always risk management. I was thinking about this story. So risk management is about understanding the risk and return, risk and reward ratios on every trade. So whether it's a trade or investment, you have to go, okay, what's my potential reward? What's my potential risk? And so you always have to manage that. So we're not gambling. And I was thinking, I heard this analogy and it made perfect sense. So I've grown up doing a lot of like martial arts, and I do a lot of like Muay Thai kickboxing, and I was talking to this guy and it kind of brought this analogy to my place. But anybody who's ever watched a boxing fight or like an MMA fight, right before the ref starts the fight, he says, protect yourself at all times. Right? And you know that a boxer takes hits, but they keep their guard up, right? So they're taking hits, and this is part of it, and they're waiting, and then they make their move. So you're protecting yourself. And as a trader, I mean, if you're probably going to lose 4 out of 10 trades, 3.5, 5, whatever, somewhere in the 3 to 5 per 10 trades, but you're protecting yourself. I'm using stop losses, right? I'm using techniques to protect myself. So when the opportunity arises, whoosh, I'm ready. And so I thought it was kind of a good analogy, because no one is going to win 100% of the time. You can't just be a boxer with your hands down. You have to just know that I'm going to lose some of these. And so you have to protect yourself at all times, wait for your opportunity, and then you're ready to strike.
Absolutely.
Well, I'm probably the classic example of where I didn't protect myself on that short, that position I took. Was it a week ago or 2 weeks ago?
It's about a week and a half.
But it's not about protecting yourself on any one trade. It's about protecting your overall portfolio and strategy. So I can afford to lose one trade because my portfolio is set up in a way where that won't crush me. I can afford to take one hit as long as my hands are up. I can't afford to take one hit with my hands down.
I really like that analogy a lot. I like that a lot, Mark. I'm going to steal that from you. I like it a whole lot. Even to lean onto that, if you look at a boxer like Floyd Mayweather, a lot of people are not big fans of him, but I love how he approaches the sport because he takes very little punishment. So in the world of trading, Floyd Mayweather is the epitome of example of what a fighter would be if I was a boxer instead of a trader, where we're trying to minimize as much damage and impact we're taking, and we're taking the right and appropriate shots to win the most points. And that's all it's about. It's not about anything other than at the end of the day being profitable.
Yeah. So you can, just like being a boxer, you're going to take hits. You just don't want to get knocked out. Exactly. And as a trader, as an investor, our portfolio is going to take hits as well. But our job is to manage our risk so that one position doesn't wipe us out. Or as a trader, you could lose 4 or 5 out of 10, but if you put too much into those, that could wipe your portfolio out. And so we understand that, hey, risk is there. We're going to take hits, but we have to structure our entire portfolio in a way that one position or a couple positions won't kill us, knock us out. So,
no, that's a great start. And I bet we could just dive into that, for hours and hours and hours, because that's literally, right, that's the secret of investing, I feel, right? Everyone says, oh, is it just, tell me what coin to buy, or tell me what stock to do, or tell me what position. And, it's not that I don't want to share information with people, but when people are asking those questions, I always just want to shake my head and say, it's not just about the coin. I think you were talking about, right? Even if you'd gotten into Bitcoin in 2011 at $100 and that was worth $10 million or whatever the heck it would, most of us, unless we have a good strategy and, the right mindset involved, we would have sold at any of the tops, at any of the bottoms, because we just can't handle it on that front.
Right. And that comes back to, that's obviously a much deeper thing. So then it's really understanding what you're investing in, what it's doing, and then understanding that you need to hold throughout the market cycle. So it goes deep. It goes really deep, and that's why most people would rely on an expert such as myself or Yusuf to kind of help them, because they can't really be an expert at everything, but they do need to be an expert on at least managing their own portfolio. So even if you are being told what coin to buy, you still need to know, you know, how much of my total investment should I put into crypto? How much should I put into any one position? So everybody needs to know that for sure. And you don't, and it doesn't take a lot to get to know that. Like, I mean, just a couple of hours of reading, you could figure that out. It's not, you know, to know which coin to buy. I mean, you know, I'm spending, you know, our team's spending hundreds, if not thousands of hours a month trying to figure that question out. But just knowing how that fits into your allocation, you know, strategy, you can figure that out pretty quickly, and you should.
Yeah, no, that's good to hear. But let's kind of get back to events and stuff like that. So Youssef, how's it been? We didn't hear from you last week. I hear you've been, you know, exploring new frontiers because the Bitcoin markets have gotten a little hot and heavy, or how's that come along?
Yeah, I've been quite busy over the last couple of weeks, and to kind of lean into what you guys were mentioning just now, as far as having some type of emotional intelligence when approaching the markets, just as if someone would have bought Bitcoin, let's say at $1, myself included, there's no way I would have bought Bitcoin at $1 and watched it rise to $20,000. It just would not have happened. And I'm a trader. It just would not have happened. By the time Bitcoin hit a good 100, 200 bucks, I definitely would have been taking lots of profit. I would have been entering back into the market as well, but there's no way I would have held through the entire evolution. So part of that is having some emotional intelligence and discipline, and that's really the biggest thing when approaching the market. So the last couple of weeks, what I've been working on is a tool to kind of help even discipline myself so that I know exactly when to enter the market, when to exit the market, and it kind of does these things autonomously by itself. So that's something that I'm really proud on. It's just trying to offer some type of solution to where people can be guided in the market, even myself included, so that I know when to take profits, when to take losses in a much more accurate, precise type of way. So that's been my baby. That's what I've been working on. Because at the end of the day, I want to live like you guys. I just want to push a button and, you know, chill on the beach with Mark and Charles. That's what I want to do.
That's cool. Yeah, anytime you can, and I talk a lot about strategies, and strategies are basically the same thing. It's something that you develop ahead of time that keeps you in your lane.
Right.
So, you know, you need to have a strategy, and if you can have a tool like what Yusuf's talking about, then that's even helpful, right? So anything that you can do to help yourself have that discipline of staying in your strategy.
The thing is, you know, what I've learned about like market psychology, even when you look at certain principles like Elliott waves, I'm not like a big Elliott wave guy, but there's certain principles behind it that really underline market psychology. The markets, no matter what type of market you're looking at, they typically move really all the same way. Because it's all human. It's all human driven for the most part. There is some manipulation, especially coming into crypto, where I've seen some evidence in that, but I don't want to get into that. But for the most part, it's all just human psychology. So once you kind of get ahead of that human psychology, say, okay, this is if X and Y happens, Z is most likely to happen, then it's more so just knowing where you want to place your orders. And that's something that doesn't, and so basically you could have a trade plan and you could pretty much automate it and make it more mechanical so that you're not analyzing the charts and having so much emotion and time involved. Because once you have time involved, your emotions are involved. You want to make sure that it pays off.
Right.
So once you get your time back, there's no emotions. So I'm starting to really see that the markets are actually a lot more predictable than what I may have given credit for. So it's really interesting times. You know, in crypto, the bull run we went on, I thought we would have had a little bit more of a pullback. That didn't really happen. Went on a nice little bull run. And there's certain elements inside of there where I think that we can kind of systemize this entire movement and make it easier for everybody.
So I was going to say that's interesting. You say that the markets are very emotional, and a lot of these moves kind of run on that. The interesting or really the challenging piece then to be successful is to be able to, one, like you said, understand that, but where the hard piece comes in, or the challenging piece, is that I have to go against my emotions.
Exactly.
Right? And that's what's hard. So it's
very hard.
It's one thing to understand that they're emotional, But the reason why the markets move with emotion is because everybody basically moves the same way. It's human nature. And so I have to work against that. And that's really hard.
And that's very hard. It's very hard. I mean, like right now, Bitcoin is almost at $9,000, and it's very tempting for someone waking up, seeing the market to want to jump into Bitcoin. But right now, coming off that move, most likely a retracement or pullback is on the horizon. But there's people that's going to be running into Bitcoin right now where they should have been running into Bitcoin at $8,000 or $7,000. So it's really tough trying to get that discipline because nobody wants to miss that big move. So the only thing I can encourage people to realize that no market moves in one direction only. So anytime there's a big move, there will be a pullback, and you will have opportunity again to capture some gains.
So that's actually, we actually got a question in the comments. Double top in Bitcoin now on Candle. You've got the 1-day chart, the first top being on March. Saying we need to break 9K or we're retesting at 7K or even lower.
Well, I'm gonna share something that may go against conventional wisdom here. Bitcoin never really, in my view, Bitcoin never really broke out. Like we're still inside the apex. The reason why I say that, and again, there's not too many people with me on this. But the reason why I say that is because we have to account for the bull fake we had. What was that? Like a couple months ago, we had that bull fake when we were at, what was that? $15,000.
Can you share your screen and pull up a chart? Maybe that'll be easier.
Yeah, hold on 1 second. Let me just pull it up real quick. Let me pause these alerts so they don't go crazy.
While he's doing that, I'll just comment that he's right. So what we've seen with this pump is quite a bit different than what we've seen in other pumps. And so anyone who's been watching my videos long enough knows that I love to study history to help predict the future, but it doesn't always do the exact same thing. And this pump that we've seen over the last couple of weeks has been quite a bit different in that typically we'd see Bitcoin pump first and then the money kind of trickles down. But we're really seeing the alts kind of rise before Bitcoin is.
EOS did numbers. I was proud of EOS. Oh, man. EOS was a rock star for us. Like, man, EOS did numbers. I was really happy with EOS.
Good for you.
All right, I'm about to share my screen. All right, you guys see that?
Yep.
Oh.
This is the daily chart right here. So, before I took my trend lines from the top here, I did the bottom wick, I did the close and the top wick, but it didn't really make that much sense to me. Just looking at price action as it progressed. And if we're going to consider this as a fake out breakout or a bull fake, then we have to kind of bring, in my assessment, our trend line backwards just a little bit to where it makes sense, to where it's confluent. And this trend line makes a lot more sense to me. So we're over here now, right at the tip, the edge of this the main downtrend. So if we're looking at price action, we had an indecision candle, a bearish candle here. So for this daily candle to close bearish or neutral, wouldn't be that big of a surprise. And then for the next days to follow for us to come down. So I'm looking between 8,000, 8,500 as my next potential target for Bitcoin. And I don't think we're going to get there, quickly. I think we're going to see a little bit of, consolidation, a little bit of sideways movement. But if you're for all my Elliott wave theory guys, we completed our fifth wave. Let me see if I can pull it up real quick. I mean, we went something like this here. So this right here would have been our fifth wave for all of our Elliott wave guys. So that would give us a 3-wave potential correction down. So I still think we're in the apex. I still think the show hasn't really started yet. And another thing, when we did break up here, when we went from 7,000-ish to 7,900, what I shared with you and Mark, I said, if it's technically, because I was using my old trend lines, I was like, technically we broke out, but this doesn't really feel like a breakout. I was expecting a lot more. So this doesn't even feel like we're really breaking out. And we're still lower than this previous high. And for all my TD sequential guys, if you guys are on here, we had our daily 9 and then we got a bullish 1. So for those who are not familiar with that, so we had a reversal on a daily candle, which we kind of violated that. And the reversal was supposed to be towards the downside. So we're really overextended, and we're right at this main downtrend. So we really exhausted everything we had to get here. We don't have any more gas over here. We don't have much more gas. So my play on Bitcoin is short to at least $8,000, and then we'll reassess from there. But the show hasn't really started. Nobody needs to panic. I mean, we're still in this, except EOS. EOS is doing amazing.
So based off of this, we need to get above about 91.
We're really not bullish until we get across $9,200.
92.
That's minimum. And if you're being conservative, you could say $12,000, and I can't argue with that. But if you're being, lockstep with it, you really have to close daily above $9,200. And I just don't think we have the gas. I think we spent all of our gas getting here.
But as I just pointed out, right, this has been different, and the alts are pumping, and they're not really caring what King Bitcoin is doing right now.
That is true. And when you mentioned that, I started looking at some alts. I was like, man, Mark is right. These alts are just living life. So that's
I mean, the Bitcoin. So one thing that I always look at is the dominance, Bitcoin dominance. And so Bitcoin usually likes to be about 45%. And so we kind of have that average. And then when things get too far above or below the average, then they'll typically snap back. Through the Bitcoin run of like November, December, it got up to like 65%, which we knew was going to be way too high. And then it dropped down to about 35%. It had climbed back up to about 45%, but today it's down about 38% again.
Wow.
Or actually 37 actually as we speak. So that's one thing that I kind of keep a watch of. And what that tells us is that the alts are climbing faster than Bitcoin, a lot faster.
Well, let's bring this up because you made a comment on EOS, and EOS is essentially a platform. But if you also take a look at the bull or this kind of, call it recovery or whatever you want to call it, the pump fake, Bitcoin in the last week is up, 10%, but Ethereum is up 27% or 26% week over week. And if you look at these alts, I mean, some of these alts are on fire. Yeah, that's the only way to say it. I mean, you said EOS. Neo is up crazy over the week. I mean,
we have a ton of positions that are up over 100%.
What the heck's going on with Dash? I mean, Dash is going pretty wild. I mean, geez. Yeah, Dash is up 100%, over 100% this week. I mean, that's wild. Jeez.
That is wild.
This is a nice morning to wake up to, actually. Excuse me.
Yeah. Yeah, the alts are they're just pumping super hard, The alts excluding Bitcoin, the alt market is up 73% since April 8th. And so yeah, 73%.
I think you mentioned, Mark, in regards to like Bitcoin of 2014, I think he was going down that road as far as price action of how it behaved back then versus now.
So since April 8th, Bitcoin has increased 30%, while the alts have increased 78% in the same period. So anyway, what were you going to say, Yusuf?
I think Yusuf's going to start watching some alts now.
I mean, since Mark mentioned that to me, I started watching a few more alts because on my platform, my trading platform, I don't have all of the alts. So I started to trade back again on Bittrex and Binance. But yeah, EOS was definitely a big play. But my commentary was in regards to the price action of 2014, where Bitcoin did something almost eerily similar. The argument is that the adoption rate of what Bitcoin is now is nowhere near 2014. So a lot of technicians dispel that entire comparison, but it's really similar. Like, I understand fundamentally, like, you can't compare Bitcoin to 2018, 2014, but price actually looks so much alike. It's like, how can you completely just ignore this?
Yeah. Yeah, and one thing that we're starting to see that I think is really going to continue to exaggerate the difference between alt and Bitcoin, especially with the dominance, Bitcoin dominance, is that we're starting to see more and more USD pairs on the exchanges. Binance, which is the #1 exchange, I think they're doing like 2 billion a day in exchange volume. They came out and said they're going to bring a bunch of new USD pairs. I know Bitfinex has been doing that, USD pairs. And so that means that you can exchange directly from USD into the alt and back without having to go into Bitcoin. And so that is going to make Bitcoin lose its dominance. And so what happens is the reason why Bitcoin will typically pump first and then the alts is because all the money has to flow into Bitcoin first. I have to buy Bitcoin, then so Bitcoin goes up, and then I sell my Bitcoin for alts. So the money goes Bitcoin first and then alts go second. But now people are being able to buy more and more alts directly with USD, skipping and bypassing BTC. And so that's a big reason why
I've noticed that even on the charts where Bitcoin would kind of lead, but now it's not leading anymore. So for instance, we've seen, like, I was watching Litecoin and Ethereum really closely over the last couple of weeks. And Litecoin and Ethereum, they actually made their move and Bitcoin did not. And then it just spiked out of nowhere $1,000. So it was almost as if Bitcoin was literally trying to catch up to what the alts were doing. It was really interesting. I was in that trade. It spiked down, I lost some money, then spiked up, and I made a lot of money. It happened literally within minutes, at least it felt like minutes. But yeah, so it's really interesting because I could see that happening in price.
Well, I think what might, I don't know if we've never really talked about investing theory or methodology, but, from our perspective, you're a trader, so you just look at the action and you don't really care what the heck you're investing in. But from our perspective, in the world of blockchain, there is the currency application, of which Bitcoin is one. In addition, there's like Litecoin and Dash and Monero and, Zcash, all that sort of stuff. And then there's all these other blockchain applications, whether it's, Ethereum or EOS, which are more platforms. Neo's another platform. There's, identity solutions. There's now this new evolution of the security token. There's a new evolution of the interoperability chains, like all these other various aspects that we're looking at. And I mean, I can't speak for Mark, but, in my case, the currency application is probably 15% of my entire portfolio. And I'm probably more bullish on the other applications of the blockchain, maybe interoperability, maybe decentralized exchanges, maybe all this other stuff, than I am on the core currency aspect, because I see a major risk factor of, banks are getting in. And, when the bank gets in, I'm not saying Bitcoin will go away, but, imagine what would happen if there was like a euro equivalent, that was supported by the banks and everything. Do you see what I mean? Like, that's a big risk factor on that front. I think it's just, Mark, we'd love to get your take on this. I mean, the alt unbundling, this Bitcoin dominance thing, is that that seems like it's changing, because you even mentioned earlier, Mark, this time the recovery, Bitcoin's coming, but, Ethereum is popping.
Yeah, yeah, that's what I said. I already said it. You comment. I don't know what else I can add to that. But you're right. Yeah, we're seeing the alt rise without Bitcoin, which is typically not the way it goes. And like I said, I love to use history to try and predict the future, but you have to understand it doesn't always copy exactly. And so it's super important not to just look at history, but to dig in to see exactly what's happening and understanding how it's different now, and then trying to make some adjustments. And obviously, we're always just guessing at the end of the day, but hopefully it's like an educated guess. I pulled this up. This was just kind of like a little hype up thing. I want to show this to Yusuf, and don't laugh. Here's my here's my charting. But I put this together last week, a couple days ago, and on April 8, can you see the screen?
I see it.
And this was just like a guess. This was just kind of using history. So we were at 323 billion on April 18th, and everyone's like, like how long could it take to get back up? And I was just looking. The last time it was at 323 was on November 28th, and so we'd gone from 323 to 831 in exactly 40 days. And so it wouldn't be impossible to guess that it could do it again in 40 days. So this was my chart.
I like it.
But yeah, we don't know. We're just looking at history, and we just gauge off of different things. We try to understand what's different today than it was in history, and then try and make adjustments. So we.
That's really important. You have to be able to make adjustments. You have to plan to trade your plan, but you also have to be able to make real-time adjustments so that you're covering yourself and you're trying to capture as much out there as possible.
Yeah, exactly. So
I think let's segue into some kind of fundamental updates, news, and things like that. I'd like to throw something out there. I think you'll get a kick out of this one. You'll probably give an "I told you so," but there's a new piece of news that Coinbase has suspended WikiLeaks' Bitcoin account. So, as everyone went back, right, WikiLeaks basically got cut off by Visa and MasterCard and PayPal and all that stuff, 3 years back, because the government felt that, what they were doing was they didn't like it. So they used their influence on the banking systems to, try to cut off their flow of funds. And WikiLeaks, and also, that's also a lot of these more right-wing or extremist organizations. And WikiLeaks isn't a right-wing one, but like a lot of them have become very wealthy because they could only take Bitcoin as payment. And as Bitcoin appreciated, things went well. But I find this to be interesting where, Coinbase now is, I guess, almost becoming like a MasterCard. And they're now starting to shut down sites that don't agree with certain ideological points. I bring this up because, Mark has mentioned that this is the year of regulation and decentralization. And I mean, again, I'm not sure you're not going to say much, Mark. You're just going to say, yep, I'm right. But
well, no, I would actually like to ask you. So fundamental analysis is looking at things like this and then trying to predict what that's going to do in the market in the future. So what do you think that's going to mean in the market now and in the future? Like, how is that going to change anything?
So I look at that, right, and again, I'm going to defer to you on, expertise, but I look at that as, there was a thesis that I might say we, but really it was you, put together saying 2018 is the year of regulation. And as a result of regulation, there's going to be a trend to catch on decentralization, specifically on the exchange point, and also some level of privacy because people don't want to be, quote unquote, in the public ledger. So if that's my hypothesis, from, let's say, I think it was November, December when we started talking about this, I look at this, okay, what are the things that have to occur that are going to continue proving my point? And one of the things that, and there could be like, a series of 10 events. And I think, I don't know if it was you talking about this or someone else saying like when the CIA plots stuff out, they say, okay, they don't predict the future, but they say if
That was me. Yeah.
Plus C happens, that's going to yield this. If A happens but B doesn't happen, and then that means C doesn't happen, but it becomes like a B negative or a B alpha or whatever the heck is, that's going to go to this path. So I would look at this like when I heard, regulation and a move towards decentralized exchanges, and the exchange becomes a point for maybe payment processing or things like that. I know from my world in the credit card industry, as regulation comes into play, the next step regulators do is they try to exact control. And specifically, on the payment processing world, this is the Visa MasterCard world. As a processor, you're still beholden to the rules of the banking system. So literally, I remember like, we would be processing for, various verticals or sites like that. And we get a notice from the bank saying, okay, penny auctions, they're illegal. You got to shut off all your merchants and we're just going to freeze the money. Or, cannabis has had like its ups and downs, cannabis can't do it anymore, shut it all down. Or, and these rules were just, they were what they were. So I see this as another step along the way where people are now going to say, oh my gosh, Coinbase, a centralized exchange like Coinbase is taking these actions. As a result of these actions occurring, I am, I'm going to start taking more of a look towards, I don't know, maybe like a shapeshift or some of these more person to person or decentralized options out there. And it's just, I'm not saying that piece of information in itself is earth shattering, but that's just like another piece of information that put into the grand scheme of things, like, just one more brick on the trail leads me further and further down this path.
Yeah.
Does that answer your question, Mark? Or
I don't know. I kind of got lost in all that. So I was trying to stick with it. So first of all, everybody should. It's definitely ironic, I'll say, because people want to argue that Bitcoin has no intrinsic value. And I would argue that nothing has intrinsic value. Anything is only worth what it is because people are willing to pay that. So nothing really has intrinsic value. But where I believe the value of Bitcoin comes is in two things. One is in the network effect. The more people that use it, the more it's worth. But really, what I believe the real value of Bitcoin is, and why it's what we call revolutionary, it's not PayPal 2.0. It's revolutionary. And that's because it's what we call censorship resistant. That means I can send money to who I want to send money to and nobody can say anything about it. No one can take that money. No one can get in between us. And that was the entire reason that Bitcoin was created. And that's what I believe creates the real value in Bitcoin. And so you did, Charles, you did mention how like WikiLeaks, actually Julian Assange came out and made a statement. I think it was a tweet. And he said, I just want to thank, the banks for shutting down our accounts because now we've made whatever, how many millions of dollars because we started taking Bitcoin. And so I think there's irony in the sense that Bitcoin was created just for that, to be censorship resistant, but now Coinbase is using it to censor. So that's irony. What I would tell people is just don't forget Coinbase is a bank, just like any other bank. So obviously this movement is to get rid of the banks. Coinbase is a bank, they're an exchange, they're a centralized point of control. And so we're trying to get decentralized. And so just keep that in mind when you want to keep your money on any exchange, not just Coinbase. When your money's on any exchange, they have your keys. They decide where that money goes and doesn't go, including back to one of your wallets or anybody else you want to send it to. So don't leave your money on there. And it's scary. Unfortunately, what it means to me, and I asked you the question, is what it means to me moving forward is I try, you can't look at one piece of news, but you have to look at a collection of news to try and figure out what's happening. And unfortunately, we're seeing just massive, massive intervention. We had Trump, the Trump campaign called out and said that, there's sanctions against Venezuela and nobody in the US is allowed to buy the Venezuela cryptocurrency, the Petro. Okay, well, how do they prevent that? Well, they have this system of they want to blacklist wallet addresses. So now they want to say, hey, these wallets are attached to people that we don't like. And so all these exchanges are now required to not be able to transmit to these wallet addresses. So that's scary. And then you see Coinbase now following up with that. That in itself wasn't super scary, but like I said, all these things add up. But you want to know what the scariest piece of news that came out just this week, and it went mostly unheard, and that was that Amazon came out with two big pieces of news this week. And everybody might have heard that Amazon AWS, their web services, launched what they call blockchain templates, and they want to make it where anybody in the world can launch a blockchain on Ethereum or Hyperledger, which is which is bullish for Ethereum. I like that. It's bullish for the industry overall. The bad piece of information that came out that nobody really heard is that Amazon submitted a patent in 2014 that just got approved. It takes a long time to get these patents approved. And this one is super scary, and I'm not happy about it at all. And basically what the patent does is it allows them to use streaming data to attach cryptocurrency wallets to purchases. Now, Amazon owns retail. I don't know, I don't have data, but you know, a large majority of purchases go through Amazon.
So can you repeat yourself? Because they have the patent for tying in cryptocurrency purchases to like streaming media?
To create a streaming data marketplace. So it's a data marketplace that would allow them to attach cryptocurrency wallets and addresses with purchases and create streaming data that, for example, law enforcement could subscribe to. Now, law enforcement would subscribe to that data streaming service and get access to every single wallet address with every single purchase. And they have software that they use, like one company is called Chain Analysis, and there's other ones. And it uses like AI to start matching up transactions and wallets and addresses, and it starts painting pictures of who's who and who's doing what. And so that is, I mean, that is as Orwellian, as Big Brother as you could possibly imagine. They've become everybody's #1 purchase. I buy almost everything off of Amazon. Obviously, you know, we hear a lot about, oh, is Amazon going to start accepting cryptocurrency? Well, if they do, then know that they will have the largest database of cryptocurrency users and purchases. They're going to combine that data and sell it to law enforcement. So just imagine the implications of that.
I mean, that's actually, I don't know. Did you ever hear the story about how Target uses shopper data to like make predictions about people?
Well, yeah, they're the best. They're like probably the largest, the best use of data, big data that's out there.
Yeah, I
in
mean,
cases. But I'm talking about there's something way bigger. I mean, everybody does that. Everybody taps into big data. But to tap into what you would consider to be a private, you know, private transaction, a cryptocurrency transaction, and then match that against your buying data, and then provide that to law enforcement. So not only for whatever terrorists, but just even for taxes. Imagine. So like, you know, we just had tax day, and you know, who knows who reported what. According to the IRS, it was very underwhelming. They don't think anybody near the amount of people reported what they should have. But now they can see what you're spending on your crypto, you know, what you're spending as far as cryptocurrency, and they can track that back to what you reported on your taxes.
Wow.
It's scary. It's a massive, what we would probably consider a massive breach of privacy. But because it's a private company, we're just gladly giving all that data to Amazon, just like we do with Facebook, you know. So.
I guess it's time to move some things into Dash and Monero and PivX.
What I did see, there was but each of those Coinbase and Amazon both had 2 stories that came out this week that were negative in my mind. Obviously, I don't like Coinbase blocking transactions. I don't like Amazon having a patent to be able to match these and provide it to law enforcement. But they both also had good pieces. So Amazon, through their AWS server, is now going to allow developers to launch blockchain applications really quickly. So that's amazingly bullish. And then Coinbase also announced that they're going to release a debit card that will link to all your accounts, and you can spend from your Litecoin, Bitcoin, or Ethereum accounts right on a debit card. That's pretty cool.
Yeah, no, that's nice. So that doesn't solve the taxation issue, though, because you're going to have to calculate a capital gain or a loss every time you.
Yeah, I was at a blockchain conference on Friday, and it was for ICOs. It was all like inside industry people that were going through the ICO process, and they had panels of experts and people would ask questions, and they talked about specifically airdrops and how all these new ICOs are doing airdrops, and they said that ICO or airdrops are going to be the new spam of the blockchain, and there's going to be a whole business develop around airdrop blockers. Which I thought was interesting, but they asked a question, what they thought was the #1 hindrance to blockchain adoption. And so I stood up and I asked the panel, and I said, 1, let me answer that question. I believe that I believe that one of the biggest hindrance to blockchain adoption is taxes, because everyone argues that in order for, for this to be mainstream, we have to be using it. And everyone says we need merchants to accept it, but that's not true. Anybody that uses cryptocurrency to buy a cup of coffee or a pair of shoes or whatever is stupid, because every single transaction is a taxable event. So really that has to be removed. But then I asked the question of the panel is that anytime somebody airdrops me a token, thank you, I got that token for free. Now I use that token, I've created a taxable event for myself. So thanks for the token, but now you just cost me a bunch of taxes. So think about that.
Yeah. We're all silent.
Yeah.
I'm sure the room. So what was the reaction in the room?
Well, they basically were like, yeah, I don't know. I guess we never thought about that before, but you're right. It is a taxable event, but it's not clear. The SEC is not clear on what they're doing on this. And so if somebody gave me a coupon and I went and used that coupon, it's not a taxable event. But if I were, but this, see, because cryptocurrency is not considered currency, so it's a different law. So if they gave me a utility token to use towards services on their blockchain, that would probably not be a taxable event. If they gave me an airdrop token that was worth an exchange and I went and exchanged it for another asset that was worth money, that would probably be a taxable event. So nobody's clear on any of this. We just don't know. But the big takeaway from that event was just that the continued oversight from the SEC, a continued trend of how we're going to start to see pretty much all tokens become securities. And so that was the big trend that was being discussed. I thought what was interesting is they had several like VC, like venture capital funds from Silicon Valley there. And a couple of them were part of this big meeting that happened last week. And basically a group of venture capitalists went and met with the SEC. And they went to basically ask for like some safe harbor where there was like some exemption for previous projects. And I think they were really trying to protect their own in a sense where they wanted to make sure any projects that they were invested in weren't, in a danger zone.
Well, yeah.
But I guess you can tell that crypto's really going mainstream when you have old legacy systems, old venture capitalists going and talking to the SEC, trying to get their good old boy passes and skirt around any type of, any type of actions or whatever. So that was kind of a little bit of a coming of age moment for the industry.
That's pretty funny. That's great. That's pretty funny though. That's definitely pretty funny.
Yeah.
Wow. Well,
so, this little baby's growing up.
Starting to rebel, starting to have its
Mark,
own.
we'll bid at $1 billion market cap in 40 days.
Trillion is
Trillion.
I was just saying. I was just saying we did it before in 40 days, and we could do it again in 40 days.
That would be exciting. That'd be really exciting.
I saw someone post on Twitter the other day, and they said everybody needs to understand that for Bitcoin to move up by 10%, it needs $15 billion of capital brought into the market, and for alts to move up, it needs this much capital. And I replied and I said that's actually not true. That doesn't mean that we need 15 billion to come into the market. It's just the valuation of the market changed, and that can happen on almost no volume. And then he said, no, that's not right, blah, blah, and tried to counter me. I'm not going to get into a Twitter war. But then a couple hours later, he replied again. He's like, actually, you're right. I looked at this and you're actually right. I thought that was kind of funny. But so for the valuation of the market to go up to 800 billion, we just need positive sentiment, and we just need people to be willing to pay more for it. So it doesn't take a lot for the market to go up or down by 100 billion or 200 billion dollars. It just a little bit of sentiment. right, Yusuf? I mean,
That
you said
makes a
it's
lot of
all
sense.
emotion, right?
It's all emotion.
So you know what? Right now, Ethereum, Neo is $75. I want that. I think it's going to go back up to 150. I'll pay 80. I'll pay $85. I don't care. So I pay $85. Well, now the market cap just jumped $10 billion or whatever, $10 million, you know? So that's all it takes is a couple buyers willing to pay more, and the market cap jumps big time. And with Bitcoin, they don't even have to buy a whole Bitcoin. I could buy $100 worth of Bitcoin at a $9,500 valuation and push the whole market.
That is true. That is true.
Which is why Yusuf, you see like low volume a lot of times really can drive the market.
Absolutely. Absolutely.
Well, one thing I've noticed, if you track news of what comes up in my Google Trends, is that the sentiment has changed in terms of the news, right? We don't have people talking about the death cross as much anymore, how this stuff is a scam, how this stuff is a bubble. I mean, it seems to be switching in that other direction on that front.
Yeah, I told you guys that death cross didn't mean anything. Not in crypto. I mean, it has really no bearing at all. How do you feel about that death cross, Mark? How that worked out?
Well, so I'm not a big believer in TA, technical analysis. I mean, not that I'm a big believer. I don't believe it predicts the future. So it does a really good job of telling you what's going on, and it gives you a good idea of probabilities in the very near future. I just don't believe it's a crystal ball. And the one thing it can't account for, you talked about it being very emotional. The one thing it can't account for is what we call black swan events. And a black swan event is something that happens that wouldn't have been accounted for. And that's one reason why you had said, Yusuf, that sometimes on some ones that you feel really good about that have a good probability, you'll go bigger on. But I would say that, you never know when a black swan event's going to come out. And that's why you always maintain, rational, even position sizes. But anyway, back to the death cross, I believe you can use it as a tool, and it can give you probabilities like, hey, when you see this, there's a chance, it adds to the potential of it going down, but it doesn't necessarily mean that. Right. So you have to, and I think, Yusuf, you're really good at looking at a bunch of different indicators, right? So one indicator on itself is not enough. You need to look at multiple indicators, and then you need to get a good picture of that.
Yeah, absolutely. I was having a conversation actually with my brother in regards to something very similar when you mentioned black swan events. It's very reminiscent just in investing in general, where we could have historical data, but for a retail investor, their mentality or sentiment is more of in line with, well, what if this time is different? So even if you see a stock do the exact same thing over the last 10 years, when they come into the market with their money, like, but what if this time is different,
Right.
So it's interesting. So having those probabilities and just running those numbers, obviously that's how retail traders and investors make money as far as trading. But as far as the mentality, like we spoke about before, it's always that what if this time is different? And you just got to convince yourself, what if it's not?
Right.
What if it does exactly what it's supposed to do?
So that's why I think whether you're trading or investing or whatever, it's really about having like this long-term perspective. Like I'm running a marathon, so to speak. So it's not like I'm in Vegas. I got 2 hours in the casino. I got to make as much money as I can. That's not the case. It's like I moved to Vegas and I'm going to gamble every single day. And over time, I want to build wealth. So what I mean by that is like, even though I feel really good about this one, I'm not going to go bigger in it, because I'm not a gambler. I have a lot of time, and it's really about notching win after win after win while limiting the risk that I take. Because what happens is when you lose, it's asymmetric. So when I lose, I have to make more than double back just to get back to even. And so what happens is, I feel really good about this. I'm going to put 5 times my normal size in. Well, a black swan event happens. I lose, and now I've wrecked, the next 10, 15 trades. Just to get back to even. And so really it's about having that long-term perspective, and I'm just trying to consistently make wins, limiting my downside, and over a long period of time I'll come out ahead, as opposed to trying to like risk it all on 1 or 2 trades or investments.
Wow. That's great. Well, we've been on for about an hour. It's about time to wrap up and everything. Any final insights on your end, Mark, before we get wrapped up?
Final insights. I would say if we want to get down the prediction, I would like to hear what Yusuf says. I'll go first though. I think that sentiment has changed. I think the market's going up. I think that although Bitcoin hasn't crossed over 9,100, well, he said 9,200. Maybe we're not officially, out of that channel, but I think we've seen, as I illustrated, that the altcoins have rallied more than 3 times higher than what Bitcoin has done. So that may not be necessary. And I'd say we're off to the races. I think we're expecting this week to be good. And I think we're kind of going to continue in this uptrend right now. That's not to say that we're not going to experience a pullback, because I'm going to guarantee you that we will. We've had a pretty good rally, and so nothing goes up or down in a straight line. And so we've done a pretty good rally over the last couple of weeks, and we're due for a little bit of a pullback, but I think we'll stay in this uptrend. And I expect the week to do pretty good on prices. What do you think, Yusuf?
I gotta have to lead into that. I kind of agree with you. As far as us being completely out the woods, obviously I feel like we have some ways to go.
But what is out of the woods? I mean,
out of the woods for me is for Bitcoin. Even though we're seeing alts kind of move independent, almost completely independent of Bitcoin as far as the rally they've been going through. So part of my final words would be to definitely watch and pay attention more so on these alts as I have.
So when you say out of the woods, though, you're talking technically out of the bear channel.
Correct.
So you're technically, so you can measure that. That's a quantifiable thing. So I'm glad that you put some definition to that.
Exactly. And I don't really even need to be out of the bear channel. I just need to see a pullback and for a price to find support somewhere. Again, that $8,000 range. And if I see a completion of, let's say, like a wave pattern or something like that, to where I say, okay, this is legitimate support, then I'm willing to even go. I'm willing to be more serious about a position going back up. So right now, I'm neutral on Bitcoin. I'm bullish on a lot of the altcoins. Like I mentioned, EOS, I was bullish on. But right now, I'm still technically bearish neutral on Bitcoin until we break out the channel. But I am looking for a short position right now, because I do feel like we are going to pull back, like how Mark said. And I will be looking for a long position almost immediately after that, somewhere around the $8,000 range, depending on how price is painted on the chart. But long term, a bull breakout is very possible. It is very possible. It hasn't happened yet.
What's long term?
Long term, I would tell you exactly. And, long term is really not that long when we talk about Bitcoin. We'll just, oh, by the way, for everyone's listening, Mark put me in this silver trade. This guy knows a thing or two. he might know a thing or two, because this silver trade, it was like a cryptocurrency trade.
Well, and the funny thing, Yusuf, is, I'm not a technical analyst. I'm a fundamental analyst. So what I did is I've been in touch with the gold and silver market for over a decade. I've invested in a bunch of gold and silver mines from a fundamental basis. And what I saw is that JP Morgan has become the largest holder of actual physical silver in the world. They've done a 51% brute force attack on the industry, and they've been granted special exceptions to be able to do that. So that means something big is going on. And so I alerted you towards that, right? I told you, hey, look what they're doing. So I gave you like fundamental news, which you've turned into technical and made a lot of money on.
Yeah, he gave me the news on it, and literally an hour after I looked at the chart, it was like a perfect setup. I got into it literally 30 minutes, an hour later, I was in profit. It was just the easiest thing. And I don't watch silver that much. I trade a lot of gold. I don't know why I trade gold so much, but I don't trade silver all that much. When I looked at it, it was like a perfect setup. I was like, man, this guy Mark.
Well, you owe me a drink when we see each other.
I got you on that. What was I doing? I was going to show you guys. Oh yeah, as far as how long on Bitcoin. Let me see. I mean, we're looking at maybe 2 weeks. I'm looking to sell for maybe the next week, and then maybe to buy the week after that. So, I mean, we're not looking very long. 2 weeks, we could be in a real position to break out and really do something special.
Nice.
Mm-hmm.
Cool.
Well, I'm excited.
I'll go with that.
Alrighty. Well, for everyone who's still tuned in, thanks a lot for tuning in for the hour and listening to, three of us just kind of have some fun. In the interim, there's lots of exciting things planned for the week. Check the forum post threads in terms of what the schedule is, and we'll see you guys around. So take it easy.
Cool. Thanks, guys.
You guys.
Bye-bye.